the ridiculous yield curve control policy going on in Japan right now, where the Bank of Japan has committed to keeping the yield on a 10-year Japanese government bond at 25 basis points. Now, given that inflation is well above 25 basis points, nobody wants to loan money to the Japanese government at just 25 basis points. So the only way to keep the yield that low is for the Bank of Japan to buy the JGBs that nobody else wants. The problem is, in order to do that, they have to print even more yen, creating even more inflation, therefore creating an even greater desire to sell Japanese government bonds. And that is the no-win scenario that the Bank of Japan faced. The reason that people don't want to buy 10-year Japanese government bonds that yield 25 basis points is because inflation is much higher than that. But the only way for the Bank of Japan to keep rates that low is to create even more inflation to buy those bonds. So it's like a dog trying to catch its tail. It's never going to do it. Well, on Monday night, the Bank of Japan announced that it was raising that yield target from 25 basis points to 50 basis points, basically doubling the yield that it would allow on Japanese government bonds overnight. And of course, that immediately sent yields surging. They haven't hit 50 basis point yet. The highest I saw, I think, was 45 basis points. The government is artificially suppressing yields, and so everybody is going to want to sell. The only buyer of those securities is going to be the Japanese government bond. They actually realized this because at the same time they announced that they're going to allow the yield on the 10-year JGB to go from 25 basis points to 50 basis points. They also announced an expansion of their quantitative easing program. Talk about mixed signals, because those policies are at odds with one another because they're tightening and easing at the same time. But I think they realize that there is no way to maintain 50 basis points. They couldn't maintain 25, and they won't be able to maintain 50, which is why I know they're going to go up to 75. They're going to go up to 100, because the Bank of Japan is going to have to create just as much inflation to artificially maintain the yields at 50 basis points as they did at 25 basis points, which means eventually they're going to give up. In a way, what the Bank of Japan did was a pivot, because everybody has been waiting for the Fed to pivot. Nobody noticed the pivot in Japan, because up until now, Japan was the last holdout of the major central banks because they weren't fighting inflation at all. In fact, by pegging the yield on a 10-year JGB at 25 basis points, the Japanese already decided that higher inflation is better than higher interest rates. Well, the problem is, if you have higher inflation, you're going to have higher interest rates. And the more yen the Bank of Japan prints to buy JGBs to prevent higher interest rates, the higher the inflation rate is going to rise. The reason higher interest rates are such a big problem for the Japanese government is because the Japanese government has so much debt. The Japanese government debt to GDP is 270%. That's twice the debt to GDP in the United States, even if you include the state and local governments. 50% of that debt is owned by the Bank of Japan. And the reason the Bank of Japan owns all that debt is because they had to print all this yen to buy all those bonds, because according to the Bank of Japan and the government of Japan, remember Abenomics, the whole purpose of Abenomics was higher inflation. The economic theory in Japan was that we didn't have enough inflation, that if we only had more inflation, we'd have a stronger economy. That, of course, was an asinine theory, and I pointed out the absurdity of it in real time. Of course, it's the same nonsense that we're getting from the European Central Bank, from the Bank of England. Even the Fed bought into the idea that we need inflation in order to have economic growth, and we can't risk deflation. That's the worst possible thing. So the Japanese government was deliberately creating inflation because they said it was too low. And in fact, if you look at where inflation was in Japan, going back to 2015, the inflation rate averaged between 0 and 1% a year. So they weren't even near 2, because they were not even at 1. We had a couple of points in 2018 where the year-over-year rate got above 1%. But in fact, in 2021, the rate actually got to negative 1% year over year. So they actually slipped into the dreaded deflation. They had falling prices. Now, of course, all hell didn't break loose in Japan because the cost of living notched down a little bit in 2021. But of course, when your policy is 2% inflation, you freak out when you get a -1. And so they kept on printing and printing money. Well, now the non-existent problem of too little inflation has become a very real problem of too much inflation. It's absurd to believe that low inflation is a barrier to economic growth.
The central banks are going to surrender and inflation is going to win. Look, we've already seen the first central bank capitulate and wave the white flag, and that was the Bank of England. The Bank of England, a week or two ago, was every bit as committed to fighting inflation as the Fed, until the inflation fight threatened a financial crisis, and then they cowered out, turned around, and they're back to quantitative easing. They went from quantitative tightening to open-ended quantitative easing. In fact, the Bank of England said, we're going to print as many pounds as we have to. We're going to keep on buying gilts. We're not going to let interest rates go up. They have to let interest rates go up. If you want to fight inflation, you got to let interest rates go up. But the other thing you have to do to fight inflation is to make government spending go down, because government spending is the source of that inflation. Governments are running deficits, and the central banks are monetizing those deficits by creating inflation. Governments are actually funding themselves through inflation. When you have a budget deficit, you're not getting government for free. Every nickel that the government spends has to be paid for by the citizens. And if they don't pay for it with a tax, then how are they paying for it? Through inflation. So when prices go up, that's the tax that you're paying for all these government programs. And so if the government wants to get rid of inflation, well, then it has to get rid of those programs, or it has to raise taxes to finance those programs. And that's not happening. That's not happening anywhere. Nowhere in the world, despite all these governments that claim they want to fight inflation, no government is actually doing it. Nobody is cutting spending. In fact, in the UK, they cut taxes. Well, when you cut taxes, you increase the inflation tax. So the British were claiming that they wanted to fight inflation, while at the same time creating even more of it. That is the problem. But the same thing is going to happen to the Federal Reserve in the United States. You cannot raise interest rates without creating a financial crisis. The financial crisis we had in 2008 was a result of a normalization of interest rates. It wasn't simply a subprime problem. The reason subprime was the problem was because it was debt. People borrowed money and they couldn't pay it back. Why were they able to borrow the money? Because it was cheap. The Fed lowered interest rates to 1%. They created a housing bubble. Housing prices went up. People borrowed money against those inflated property values. They borrowed money with artificially low interest rates. And when interest rates went up, property prices went down. People didn't want to pay their mortgages. You get a financial crisis because now the banks didn't get their money back. They loaned all this money out. They didn't get it back. That was why we had a crisis. Well, today we have much more debt than we had in 2008. We had 0% interest rates for almost 10 years. Think about all the debt that was taken on during those 10 years by not only the government, corporations, private citizens. Do you think they can repay that debt when rates normalize? Of course not. And what happens when rates go up, asset prices come down. It's like the other side of a seesaw. The lower interest rates are, the more expensive stocks are, the more expensive real estate is. But as interest rates go up, those prices come down because it's all a function of interest rates. So if I borrowed a bunch of money to buy a house and now the house goes down, I have no equity and my mortgage payments are up, I'm mailing in the keys. But you have all these companies in America that have been losing money. In fact, in 2021, it was a record year in America for money-losing companies going public.